We all have different perspectives in life. We all have unique circumstances. Some are on Social Security, fixed income. There are those who are carrying lots of debt, mortgages, credit card bills, car payments, multiple baby mamas, you name it. Now, there are also those who have limited cash flow, those who rely on SNAP benefits, EBT, those who are all trying to find better opportunities, although it's easier said than done in today's economy. But today we're also talking about the state of our housing market, and the signs are pointing to the possibility of prices going down even further. Bubbles are popping, folks, and by the end of this video, you'll be able to decide if you want to wait this market out or pull the trigger now. Are any of you guys in the market to buy a house right now? And are you confident about what's happening in our economy? Are you worried about layoffs? I know that I have a lot of questions, but I'm really interested to see if your answers reflect everything that I've been reading recently, because I've seen that the narrative is that things are getting better. Do you agree? Now, before I continue, please take a second, smash the like button for the video. It is a huge boost for the algorithm, and it keeps me motivated to help get you guys all the updates that you deserve 24/7. And if you're in need of your daily dose of the truth when it comes to Social Security, SSI, SSDI, the state of our economy, the housing market, the stock market, and everything that's going on in Washington, D.C. that affects our lives, our families, and our bank accounts, be sure to subscribe to the channel. And for the best way to invest in gold, you'll see a link in the description down below of this video. So most of the things that we buy depreciate. Their worth goes down. I mean, like, just take cars, for example. The second you drive that thing off the dealership lot, its price has already been reduced by a ton. The same reason why people hold out on big purchases. And I applaud that. The commitment to have enough money, but still hold off on a purchase just because you know you can get a better deal down the line takes a lot of willpower. Now, normally price depreciation is something that isn't very common in the housing market and in real estate, but these are not normal times. In fact, housing prices continue to cool off, and it could be a sign that your wait to buy your first home is coming to an end. So just how cool are we talking about here? Well, someone put their foot down on the brakes with the housing prices, as many spots right here in the country have suffered huge losses. Now, if you bought a house last year or within the last 12 months, depending upon where you bought it and how much you paid for it, chances are you might be feeling really bad about getting into the market with prices as high as they were back then compared to what you're seeing today. But then again, depending upon what your interest rate was, there's a lot of different factors. But just look at this. If we compare the peak of the prices from May to July of last year, the San Francisco Bay Area is now down a whopping 17.1%. Now, this is San Francisco, 17% down. Now, this is like a huge slap in the face right here, but I'm far from done. Now, let's go through this list quickly. Seattle is down 16.3%. San Diego, they're down 11.5%. Phoenix slipped 10.5%. What happens in Vegas stays in Vegas. They're down 10%. Denver, they're down 9.5%. Portland is down 8.6%. Dallas is coming up close by losing 8.5%. Los Angeles dipped by 8.3%. And Boston, their NBA rival, they're down 5.7%. Now, I told you guys about this last year. Wait for the crash, wait for it, because you don't want to be stuck with the price peaks of last year. Yale economist Bob Shiller, who's the same person behind the home price index, he said, quote, "Home prices are very, very high by historical standards. I would extrapolate the downturn somewhat. It's going to continue. Maybe if you have a good chance to delay your purchase, it might be a good time to do it. It might be a little cheaper after about 6 months," end quote. Well, there you have it. Now, I'm not forcing you to see through this point of view, but that's what the experts are saying. Wait a few months and you'll get the best deal. But again, it really depends on your own confidence on advice like this. Hey, maybe the experts are wrong. And when it comes to consumer confidence, it has now come out that it's rebounded, even with inflation and this bank crisis. Here's an honest question. How does the consumer confidence work? Is this the upside down world? It's strange because, we've seen inflation hit our dollar pretty hard. Bank collapses, customers taking out billions of dollars from small banks. The Fed continues to raise interest rates, but consumer confidence is up. You know what? You're a consumer, right? Are you confident about what's happening nowadays? So here's something that caught my eye in the news. A senior director of economics at the conference board, he said this, quote, "The uptick in consumer confidence reflects an improved outlook for consumers under 55 years of age for households earning $50,000 and over. While consumers feel a bit more confident about what's ahead, they are slightly less optimistic about the current landscape. The share of consumers saying jobs are plentiful fell, while the shares of those saying jobs are not so plentiful rose," end quote. So are you guys making more than 50 grand a year? And speaking of jobs, I know we talked about layoffs at the start of this video, but besides people losing their jobs, businesses are now closing their branches. Just look at Burger King. They have now decided to close more than 24 of their branches in Michigan. The reason was vague, but crime and the economy was sure to have affected this decision. With the closures, they're expecting that at least 400 people are going to lose their jobs.
They just said they were closing down. They didn't say the reason.
Monday afternoon, Fox 2 found Tawana
outside this Burger King near Livernois and Grand River, waiting for her manager to arrive so she could pick up her last paycheck. EYM King of Michigan sent this letter to the Department of Labor and Economic Opportunity Workforce Development in Lansing, writing that nearly 430 people are impacted and that the company would permanently cease operations in Michigan due to unforeseen business circumstances and not being able to reach a resolution with Burger King Corporation.
And we're also seeing companies like Walmart, Amazon, and even the streaming site Twitch expected to cut some more people. Some startups are suffering the same fate. The EV startup Lucid will be cutting off at least 18% of their workforce. That's around 1,300 workers. Now, this has me a little bit worried compared to other companies like Walmart or Target. Why? Because stores like that will always have people who will continue to move the gears. The wheel will continue rolling for giants like that. But an EV startup? Okay, so I want you guys to think of this scenario. You believed in this company and said, heck, I'm going to get an EV with Lucid, right? But then they close in like 2 years. Where are you going to get your parts now? Like, how will you maintain your car? Things inevitably break, wear out, they need repairs. You obviously can't sell it because it's worth next to nothing at that point. Nobody wants a Pontiac nowadays, you know what I mean? You guys see how bad this could be for consumers? Now, on that note, if you thought that the initial $42 billion reported to have been withdrawn from Silicon Valley Bank back in early March was bad, Michael Barr, Vice Chair for Supervision at the Federal Reserve, just said that the damage could have gone up to $142 billion if customers were allowed to remove their cash until the next day. So for context, that would represent about 81% of SVB's deposits as of the end of the year 2022. Barr also noted that mismanagement by the bank executives contributed to the collapse of both SVB and Signature Bank. But as lawmakers summoned the top U.S. banking regulators to Washington, the former CEOs of the banks were not able to choose not to attend. I wonder why. This is the reality of what's happening to our banking system. But again, these banks are getting bailed out. But when was the last time you and I got bailed out of our problems? Let's try something in the comment section down below. Comment the last time that you felt that you were bailed out by the federal government personally. I'm excited to see what you guys come up with. Now, I know that a lot of us are going through a lot of problems that could probably be solved by improved cash flow. Now, money doesn't solve everything. It doesn't bring happiness, but I'd rather be rich and unhappy than poor and unhappy. But that's beside the point. But if you want to learn about budgeting and side hustles, small businesses that could potentially increase to multiple streams of income, or even wise investments in real estate or the stock market, feel free to join us over in the Patreon community right below the link for the best way to invest in gold. Now, getting rid of debt and cleaning up your financial troubles, this is not going to be easy or simple, but it's also not impossible. Now, before I go, guys, please drop a thumbs up for the video and subscribe for your daily dose of the truth. I do appreciate you guys watching, and I'll catch you on the next one.